Hello and welcome back, everyone. Thank you so much for tuning in. Recently, there has been a significant impact on the appeal of US debt in the international market, as China sold a record $53.3 billion worth of US treasuries. In this quick video, I want to share the details of this event and discuss its importance, emphasizing why it should not be overlooked. Amidst the ongoing trade war with the United States, China decided to offload a substantial portion of its US treasuries and US agency bonds in the first quarter of the year. The Chinese government announced the sale following a joint statement with Russia, where both nations expressed their intention to reduce financial and economic dependence on Western countries. What's truly surprising is that even Belgium, a close ally of China, sold $22 billion worth of treasuries during the first quarter of this year. This indicates that it's not just the countries the IMF refers to as China-leaning that are distancing themselves from the dollar. Even US allies are beginning to diversify and reduce their reliance on a single financial system.
The concern, of course, is that the direction of travel, if it is not appropriately controlled, you could end up basically moving dramatically away from a global rules-based trading system, which is what we've lived with for multiple decades now. So I'm going to start with giving you a sense. There's been a trend decline in the amount of the dollar in FX reserves over time. It was to be 70%. Has come down over time. But most of the diversification is going to kind of non-traditional reserve currencies like the Canadian dollar, the Australian dollar. And yes, there's some to the renminbi, but it's a small fraction. So where, if anything, are we seeing any changes in terms of on the margin? You do see it in trade finance. So if you look at the left graph over there, that again looks at the different blocks, the China block and the US block, to see what's happening in terms of adoption of renminbi in trade finance. And within the US leaning block, you really don't see anything. That's not on the slide here, but I'm just telling you, you don't see much at all happening in terms of the US leaning block. But in terms of the China block, you certainly have seen an increase in the use of the renminbi in trade finance.
Just 5 years ago, China was the biggest investor in US debt. However, starting in 2018, around the time the trade war with the United States intensified, China's holdings began to decline. By 2019, Japan had overtaken China as the largest holder of US debt. Japan, an ally of the US, reflects the growing awareness among foreign countries that the US economy isn't as robust as it once was. The increased risks make investors reconsider whether the potential returns on US treasuries are worth it, given the uncertainty of the distant future. When a government issues massive amounts of debt, it must pay interest on it. As US Treasury yields increased, the government had to ensure it could continue paying this interest to its bondholders or creditors. While the US government has been running deficits every quarter, it can print money to meet its obligations, but this devalues the currency. The surge in interest expenses raises concerns for foreign investors, making long-term US Treasury notes appear riskier than before. The uncertainty about what will happen a year from now, let alone a decade from now, has led to a decreased demand for US Treasuries. China's recent sale of $53 billion worth of US Treasuries sends a clear signal to other countries to consider doing the same. This move shouldn't be surprising. Dependency on US assets is a national security issue. The risk of sanctions or asset confiscation motivates countries to proactively sell their US assets. The primary objective of China's sale is to accelerate the move away from the US dollar. While the threat of de-dollarization seemed distant, it is now accelerating. Other countries are taking note of China's actions and will likely follow suit in the near future. Bloomberg provides an excellent illustration of this situation. In the chart, the bright pink represents treasuries, and the yellow indicates agency debt. China began selling significant portions of US treasuries in 2015. This timing is likely not a coincidence, as following the 2014 coup in Ukraine, the civil war in Donbass began. This event highlighted the risks for countries not aligned with Western policies to rely on the US-led financial system. Consequently, China and other nations started searching for alternatives, which they found by turning to safe haven assets like gold. There is a clear correlation between the massive sell-off of US Treasuries and a significant accumulation of gold, as shown in the data. It's worth noting that China reportedly holds additional gold reserves not reflected in official data, suggesting their actual holdings are likely much larger. According to the IMF, this trend of selling treasuries and buying gold is not unique to China, but is shared by other countries as well. The primary drivers behind the sale of US treasuries and securities are geopolitical. The IMF has even issued warnings that the US dollar is in trouble, and countries are increasingly reluctant to support the reserve currency due to sanctions. As geopolitical risks rise, we've observed a sharp increase in protectionist measures by governments, illustrated by the surge in trade barriers since 2022. This trade fragmentation between Western alliances and non-aligned countries impacts not only trade, but also foreign investments, including US treasuries. This trend of dissolving trade ties, especially amid conflicts and wars, facilitates financial fragmentation and increases economic costs, which we are already beginning to see. I'll end this video here. I hope you found this information helpful. Please give it a thumbs up, like the video, subscribe to the channel, and thank you for watching.